The FTSE 100, often pronounced as FTSE, is a stock market index that represents the 100 largest companies listed on the London Stock Exchange. These companies are measured by their market capitalization, which is the total value of their outstanding shares. The FTSE 100 is widely regarded as a barometer of the UK economy, reflecting the health and performance of major businesses across various sectors. It plays a critical role in financial markets, serving as a benchmark for investors, economists, and policymakers alike. For those unfamiliar with stock indices, the FTSE 100 is similar to the Dow Jones Industrial Average in the United States. It includes well-known companies such as BP, HSBC, and Unilever, which are leaders in their respective industries. The index is updated regularly to ensure it accurately represents the most significant market players. As the index fluctuates, it provides insights into investor confidence and the economic landscape. When the FTSE 100 index rises, it often indicates that investor sentiment is positive and businesses are performing well. Conversely, a decline might suggest economic challenges or shifts in market confidence. Understanding these movements is crucial for anyone interested in the financial markets, whether they are seasoned investors or newcomers trying to make informed decisions. The FTSE 100's importance cannot be overstated. It impacts not only individual investors but also pension funds, mutual funds, and other institutional investors who use it as a benchmark. As such, the recent rise in the FTSE 100 has garnered significant attention, prompting questions about whether now is the right time to invest in this index. The FTSE 100 holds immense significance in the global financial markets, acting as a snapshot of the UK economy's health. It is crucial for both domestic and international investors, providing insights into the performance of major UK businesses. Given its composition, the index is heavily influenced by sectors like financial services, consumer goods, and energy. This diversification helps investors gauge various industry trends and economic conditions. One primary reason the FTSE 100 is essential is its representation of blue-chip companies, which are organizations known for their stability and reliability. These companies are usually well-established and financially sound, with a history of strong performance. As a result, the FTSE 100 is often seen as a safer investment compared to other indices that might include more volatile companies. Investors and analysts closely monitor the FTSE 100, not only for investment opportunities, but also for economic forecasting. Changes in the index can signal shifts in economic policy, consumer behavior, and global trade dynamics. For instance, a strong performance in the index might lead to increased consumer spending, while a downturn could indicate a looming recession. Moreover, the FTSE 100 is a tool for comparing the performance of the UK market against other international markets. It helps investors decide where to allocate their resources by providing context on how UK businesses stack up against their global counterparts. As such, the current high performance of the FTSE 100 is of great interest to investors worldwide. In recent months, the FTSE 100 has seen a noticeable uptick, captivating the attention of investors and analysts. This rise can be attributed to several factors, including improved economic conditions, strong corporate earnings, and increased investor confidence. As a result, the index has reached levels not seen in recent years, prompting discussions about the sustainability of this growth. One of the key drivers behind this upward trend is the post-pandemic economic recovery. As global economies reopen and stabilize, businesses within the FTSE 100 have reported robust earnings, particularly those in sectors like energy and finance. This has led to increased investor optimism, pushing the index higher as more people look to capitalize on potential gains. Another significant factor is the stabilization of geopolitical tensions, which has provided a more favorable environment for international trade. With fewer uncertainties, companies can plan and invest more effectively, further boosting their performance. This increased stability has been reflected in the FTSE 100, which continues to attract investments from both local and foreign investors. Additionally, the index has benefited from favorable monetary policies and interest rates. Central banks have maintained supportive measures to stimulate economic growth, which has had a positive impact on equity markets, including the FTSE 100. These conditions have created a fertile ground for the index's recent rise, making it an attractive option for those looking to invest. Several economic factors have contributed to the FTSE 100's recent rise, underscoring its current high performance. Among these factors is the recovery of global supply chains, which were severely disrupted during the pandemic. As supply chains stabilize, companies are able to meet demand more efficiently, leading to improved profitability and bolstering investor confidence. Another contributing factor is the resurgence of consumer spending. With restrictions easing and economies reopening, consumers have resumed spending on goods and services, driving market growth. This uptick in consumer activity has been particularly beneficial for companies within the FTSE 100, as increased sales have translated into higher revenues and better market performance. Moreover, government stimulus measures have played a crucial role in supporting the economy and, by extension, the FTSE 100. Fiscal policies aimed at boosting economic growth have provided a safety net for businesses and consumers alike, fostering an environment conducive to investment and expansion. This support has been instrumental in maintaining the positive trajectory of the index. Finally, technological advancements and innovations have also contributed to the FTSE 100's rise. Companies that have embraced digital transformation and new technologies have experienced significant growth, attracting investors looking for promising opportunities. This trend is likely to continue as businesses adapt to an increasingly digital world, offering potential for sustained growth in the index. Section 5. Market sentiment and its impact. Market sentiment is a critical factor influencing the FTSE 100's performance. It refers to the overall attitude of investors toward the market, which can be either positive, bullish, or negative, bearish. In recent times, market sentiment has leaned towards the positive, driven by optimism about economic recovery and corporate earnings growth. This bullish sentiment has been reflected in increased trading volumes and higher valuations for companies within the FTSE 100. As investors anticipate continued growth, they are more willing to invest in stocks, driving up prices and contributing to the index's rise. This cycle of positive sentiment fueling investment can create a self-reinforcing loop, sustaining the FTSE 100's upward momentum. However, market sentiment can be volatile and subject to rapid changes. Events such as geopolitical tensions, changes in monetary policy, or unexpected economic data releases can quickly shift investor attitudes. These shifts can lead to increased volatility and fluctuations in the FTSE 100, highlighting the importance of staying informed about market developments. Understanding market sentiment is crucial for investors considering the FTSE 100. While positive sentiment can present opportunities for gains, it also requires careful analysis and risk management. By keeping a close eye on market trends and sentiment indicators, investors can make more informed decisions about their investment strategies. Section 6. Potential risks in the current market. Despite the recent rise in the FTSE 100, potential risks in the current market environment should not be overlooked. One of the primary concerns is the possibility of an economic slowdown or recession. Factors such as inflationary pressures, rising interest rates, and geopolitical tensions could negatively impact economic growth, leading to a decline in the index. Inflation in particular poses a significant risk as it erodes purchasing power and increases costs for businesses. If inflation continues to rise, central banks may be forced to implement tighter monetary policies, such as raising interest rates. Higher rates can dampen economic activity and reduce investor appetite for equities, potentially putting downward pressure on the FTSE 100. Geopolitical tensions also present a risk to market stability. Conflicts, trade disputes, and diplomatic challenges can create uncertainty, affecting investor confidence and leading to increased volatility in the index. These uncertainties can make it difficult for companies to plan and operate effectively, impacting their performance and the broader market. Furthermore, the ongoing impact of the COVID-19 pandemic remains a concern. Although economies are recovering, the threat of new variants and potential disruptions cannot be ignored. Any resurgence in cases or renewed restrictions could negatively affect business operations and market sentiment, posing a risk to the FTSE 100's continued rise. Section 7. Evaluating the rewards of investing. While risks are inherent in any investment, there are also potential rewards to consider when investing in the FTSE 100. The index offers exposure to a diverse range of industries and companies, providing opportunities for growth and income. Many FTSE 100 companies pay regular dividends, offering a source of income for investors seeking returns beyond capital appreciation. Investing in the FTSE 100 can also provide a hedge against inflation. As companies grow and increase their profits, their stock prices may rise, potentially outpacing inflation and preserving purchasing power. This characteristic makes the index an attractive option for those looking to maintain or increase their wealth over time. Another potential reward is the opportunity to benefit from the UK's economic recovery. As the economy continues to stabilise and grow, companies within the FTSE 100 are likely to experience increased demand and profitability. This growth can translate into higher stock prices and returns for investors who have positioned themselves strategically within the index. For long-term investors, the FTSE 100 offers the potential for capital appreciation and portfolio diversification. By investing in a broad range of companies, investors can reduce risk and enhance their chances of achieving their financial goals. This diversification is particularly beneficial in uncertain market conditions, where individual stock performance can vary significantly. Section 8. Short-term versus long-term investment perspectives. When considering an investment in the FTSE 100, it's important to weigh both short-term and long-term perspectives. In the short term, investors may be attracted to the index's recent performance, hoping to capitalize on continued growth and momentum. However, they must also be aware of potential risks and the volatility that can accompany short-term market movements. For short-term investors, market timing and agility are crucial. They need to stay informed about economic indicators, corporate earnings reports, and geopolitical developments that could impact the index. By actively managing their investments and adjusting their strategies as needed, short-term investors can potentially benefit from price fluctuations and capitalize on emerging opportunities. In contrast, long-term investors focus on the broader economic and market trends that shape the FTSE 100's performance over time. They prioritize sustained growth and income generation, often looking beyond temporary market volatility. By maintaining a long-term perspective, these investors can ride out short-term fluctuations and benefit from the compounding effects of their investment. Ultimately, the decision to invest in the FTSE 100 should align with an individual's financial goals, risk tolerance, and investment horizon. Both short-term and long-term strategies have their merits, and a balanced approach that considers both perspectives can help investors navigate the complexities of the market while maximizing potential returns. Section 9. Conclusion is now the time to invest. In conclusion, the recent rise of the FTSE 100 presents both opportunities and challenges for investors. The index's strong performance and favorable economic conditions make it an attractive option for those seeking growth and income. However, potential risks such as inflation, geopolitical tensions, and market volatility must be carefully considered. For investors with a long-term perspective, the FTSE 100 offers a compelling opportunity to participate in the UK's economic recovery and benefit from the growth of major companies. By diversifying their portfolios and maintaining a strategic approach, long-term investors can position themselves to achieve their financial goals while mitigating risk. Short-term investors, on the other hand, should remain vigilant and informed about market trends and developments. By actively managing their investments and adapting to changing conditions, they can capitalize on short-term opportunities while minimizing potential downsides. Ultimately, the decision to invest in the FTSE 100 depends on individual circumstances, goals, and risk tolerance. By carefully evaluating the current market environment and aligning their strategies accordingly, investors can make informed decisions about whether now is the right time to invest in this prominent index.